unicorns and rainbows. So for years now, Silicon Valley and Wall Street have been combining to sell the retail investor enormous amounts of unprofitable technology companies. But this trend accelerated in the last 12 to 14 months. As you can see there with some of the charts, the top two charts, the one on the left, the one on the right, the Goldman Sachs non-profitable technology index, it went parabolic for the amount of companies that were dumped onto retail investors. But it looks like this could be coming to an end. Some of the market leaders for unprofitable technology companies like the ARK ETF and the Goldman Sachs non-profitable technology index, the shares of these are starting to fall. So the charts below the two large ones are showing that they are breaking below support levels, below trend lines. The ARK ETF is already down 29% from its peak, and you're starting to see other similar chart activities. So these are unprofitable technology companies. Some of them can barely even grow revenue with unbelievably high valuations. The valuations are so ridiculous compared to the 1999 and 2000 technology bubble that I've laid out in prior videos over the last month or so, that many of the valuations were 10, 20, even 30, and sometimes even 40 or 50 times the valuations of what a unicorn used to be during the last technology bubble. So for those of you who are not familiar, a unicorn in the last technology bubble was a company that had $1 billion valuation with revenue growth only probably and no earnings, or it would take many, many years, if at all, to ever get earnings, no dividends, no free cash flow. And here we are now with not only many unprofitable technology companies with valuations of 10 billion or more, 20 billion, sometimes 30 and 40 billion, sometimes even higher than that in the rare cases, but also cryptocurrencies. A lot of this is because of the Cantillon effect, trillions in new currency and credit units from governments and central banks in just the last 14 months are flooding asset prices and commodities. And this is a type of misallocation of capital on an unprecedented scale that you get. Some of the market leaders, these unprofitable technology unicorns, we're going to have to come up with a new name because there's so many unicorns now that they're not even rare anymore. How many technology companies were unprofitable with insanely high valuations of 10 billion or more. So these charts are finally starting to break down. It does not mean that a stock market crash is necessarily imminent in the next couple days or next couple weeks, but in the coming months, if the Fed is threatening to do one rate hike or reduce their bond purchases, there may be a really bad temper tantrum from Wall Street banks and hedge funds, as there is a sizable stock market correction in the next 6 months or so. Finally, if you enjoy free content like this, please chip in $5 a month. As an added bonus, there is over 150 articles, charts, and audio podcasts behind the paywall for my patrons, including 4 new articles in just the last 2 weeks on companies like Sandstorm Gold, a new mid-tier merger in gold mining, an extensively researched oil article talking about the oil market with lots of other articles to read if you want to take a look at that, as well as analysis. And again, that's only $5 a month. The more people who chip in and become patrons, the easier it will be for me to focus making videos like this and then extensively researching articles for my patrons.